Everyone wants to be on the beach collecting that mailbox money from their 25 rental properties when they're 40, right? That's kind of the mindset that people preach. And it is practical and it is possible, but you've got to start moving that direction. So if you're like me and you don't have a whole lot to start off with, but you don't want to work the 9 to 5, you don't want to work for the big brother, you want to chase your own dreams, well, wholesaling might be the way to start.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 434. When it comes to real estate investing, there are two types of investors: those who choose to actively find, fund, and manage their portfolio, and those who prefer to take a more passive role and let other professionals handle the work and time commitment. My guest today has taken on a more active role in buying properties to rehab and rent while creating opportunities for investors to generate passive income. Jason Engelman is the CEO of Freaky Fast Home Buyers and Investments, which currently manages $35 million in assets in 6 different states, including Georgia, Texas, and Ohio. Jason, welcome to the show.
Hey, thank you, Brian, for having me.
Tell us a little bit about yourself and how you got started investing in real estate.
It's a wild story. And every time I tell it, I feel like it gets wilder and wilder, but it's true. And it seems like people always love it. So I always enjoy sharing it. I grew up in a pastor's home, went to seminary, and when I was out of high school, but my dad was a pastor of a small church here in Fort Worth, Texas. And so I volunteered in the church from more of a volunteer perspective, but I worked with the students and the youth. And started working in the investment sector, primarily in oil and gas, which is really big down here in Texas. And I met my wife and we started dating. And then when we got married, we moved to Nashville because she is a country artist. And so we moved to Nashville. The oil and gas market had collapsed in 2016. Or it actually kind of started in 2015. If you remember, oil was like 105 a barrel and it went down to like 25 a barrel. And it just was not fun dealing with investors in that type of situation. And oil and gas is a super risky investment. And so I was just done. And so we moved to Nashville and I opened up a Craigslist ad, believe it or not. And there was a group out of California that was a wholesaling group, and they were looking for an acquisitions manager in Nashville. And at that time, the Nashville market was screaming, but it was still kind of early in that time. So there was a lot of opportunity, a lot of deals. And so started working with them. They taught me the business. And then things really picked up in the sense of the competition, and it was harder to come with leads, and the prices were just going crazy. So they actually ended up moving to a different state. And so then I started wholesaling on my own. And I literally had $20 in my pocket. And my wife likes to claim she was my first investor because it was her $20. But we wrote out handwritten letters, and I had enough to buy 40 stamps. And I prayed over those. I was like, God, I'm out of money. I've got bills I got to pay. Would you please have someone call? And so we mailed out those letters. And 2 days later, I got a call from a guy. And I was in East Nashville, which was one of the hottest areas. And so what I did is I called up one of the buyers that fix and flipped regularly, and one of my best buyers. And I said, hey, I got this deal. It's my first deal. Would you come look at it with me? And so he did. And so I locked it up under contract. I flipped it to him. We closed in 2 weeks, made 10 grand. And so I started doing that periodically in Nashville, just really hustling. But again, the competition was just crazy and prices were high. So I got a phone call from a gentleman who was like, hey, my mom's turning 80 and she's got 20 properties that she's wanting to sell. Are you interested? I'm like, absolutely. And he goes, well, they're in Columbus, Georgia. And I had never heard of Columbus, Georgia. And I was like, okay, well, I'll take it. So I went and comped the houses, looked at them, walked them, fell in love with the town. So that was my first deal that I ever did where I bought the properties. And I started off with $20 in milling out letters. And I just built that up over a year's time to where we started Freaky Fast in June of 2019, purchasing homes in Columbus, Georgia. And from there, God is really blessed. We worked really hard and I've lost a lot of hair. So it's been quite an interesting ride, to say the least.
Promote your wife. Who is she and how can people find her and listen to her?
Her name is Tori Martin. And you can get her on any of the Spotify, Apple Music, iTunes. You can find her on YouTube. Her last song, Lucky, went number 42 on Billboard, which was absolutely huge. She signed to an independent label, Lucky Sky Music. Super proud of her. She's crushing it right now. And what's really cool is, I mean, her music's great. It's kind of a little more traditional country, and people just really love her. She really connects with her fans and her audience. So thank you for allowing me to plug her. I know you'll enjoy it.
Let's talk about wholesaling. Let's start there. I mean, that was kind of your entree into real estate investing. Talk a little bit about what that was like and some of that fear of only having $20 in your pocket and just really hoping you get that first wholesale deal.
I've always kind of had an entrepreneurial mind, so that helped. And fortunately for my wife, she had an entrepreneurial mind too. I know a lot of, I guess, it's unfortunate, but a lot of spouses, maybe they're entrepreneurial, but their other spouse isn't. And so that can really kind of add more stress to getting a deal done. Fortunately for us, we're both have that mindset of building something, sometimes from nothing, and making it happen. And so that helped, because there was stretches where it was feast or famine. And I remember I was fasting and praying, like, God, please, I need a deal. And after a couple months of not getting one, I got a guy who called me who had 13 houses and they were dumps. But man, I was so happy to have something. And so that was my first big deal. And so for me, it's all about just being aggressive. To me, it's about knowing your why, knowing why you're doing it, and allowing that to kind of fuel you. So that's number one that I would give advice to for someone who's wanting to wholesale. But the second thing to me is one of my mentors, who was a gentleman who bought that property from me for 10 grand. He told me this, and I've never forgotten. I've used it many times. He said, my mentor once told me, the stars may lie, but numbers never do. And that is so true. And if you're going to be a wholesaler, know your numbers. There's nothing worse than getting like a wholesale lead from a wholesaler who's like, hey, this house needs only 25,000 in rehab. And then you look at the pictures and you're like, bro, it's completely gutted. Like, it's going to be every bit of 70 or 100,000. And if anything will discredit you as a wholesaler in the eyes of an expert real estate investor, it's having the wrong rehab numbers. And so what I did is I partnered with a contractor. And I said, hey, if you would walk these jobs with me, give me realistic scopes of work with realistic numbers, I'll split the assignment fee with you. And that helped me so much, because I was able to not only provide good numbers to my buyers, so they knew if I sent them a deal, it was a good deal. But two, it also taught me the rehab side of this industry, which is so important in my opinion.
What are the numbers? Like, what if the numbers don't lie? What are the specific numbers you want to know when it comes to wholesaling?
Well, I guess really you're trying to figure out what you can buy that property for and making sure you're putting in a good offer. So obviously the rehab is very important. One thing that a lot of people forget though is holding cost. They don't factor the holding cost in. That holding cost considers closing costs, realtors fees, utilities fees, insurance fees, taxes on that property while you're rehabbing it, whether it takes you 30 days or if it takes you 6 months, you're going to have taxes on that property for the time that you've owned it. So knowing those numbers as well is super important. And then that kind of helps you in the sense of trying to figure out what you should offer somebody. The other thing too that's very important is knowing what your buyers want to make. What's their buy box? Depending on where you're at in the country may determine that. Most investors, if they're going to flip a house, they want a 20% ROI on their money. So you need to factor that in. So usually one of the most simplest and popular formulas is figuring out the ARV and then multiplying that by 70 and then subtracting the rehab, and then that is what you can offer. Because basically in that 30%, you've taken out the holding cost and the 20% that investor wants to make. So in some ways, that's probably the easiest formula you can use if you're just starting out.
Break that formula down for us again. You said ARV, which is after repair value.
Correct.
And then break that down again for us.
For example, let's say it's 100,000 is the ARV. Multiply that by 0.70. So that means you're taking 30% out. So that takes you down to $70,000. Then you subtract the rehab value. So say it's a $40,000 rehab cost. So that means your offer should be $30,000. Actually, I missed one step. So you're at $30,000. Then you need to figure out how much you want to make as a wholesaler. So if you want to make 5,000, then your offer should be 25 grand. If you want to make 10,000, then your offer should be 20 grand. So sorry, I forgot to add the assignment fee in that.
Would that formula then also work for the fix and flippers too? If you're going to buy it, fix it, and then flip it, you use that same formula minus the wholesale fee.
Right. 100%. So that's probably one of the simplest formulas that you can use.
Let's talk about that transition then, because you started in wholesaling, but then you started doing a lot more. Buying, fixing, flipping, maybe doing some hold. Talk about that as well.
There's two strategies, and you already mentioned this in your intro. There's active and there's passive. And so when someone usually asks me, how do I get started in real estate? I usually follow it up with the question, well, what do you want? Do you want to be active or you want to be passive? For someone like me, I didn't have a choice. I had to be active. And the reason for that is, I didn't have any money. But let's say, some of my investors are like doctors or dentists or attorneys or someone who's got a really good job. And they've got money that they're making and they're looking for places to put that money in investments and get that money working for them. Well, they have no business being an active investor. And so they need to invest passively. So to me, it's trying to determine where you're at. If you're starting off, you've got no money, the easiest way to start is wholesaling. But as you start bringing in money and as you start getting to know the business and you're starting to gain that experience, you really want to try to transition into buying properties yourself, whether you're fixing and flipping them, whether you're rehabbing them. And in some ways, I feel like as real estate guys, if we've been doing this for a while, we sometimes forget just the simplest basics of the business. So it's like, maybe your first one's a flip and, you maybe borrow the money from a hard money lender or somebody like that, or a family member or whoever's got some capital that wants to make a decent profit on that. And they lend it to you. And then once you flip that and you make that profit, now maybe go buy 2 homes using that profit as maybe a down payment for a second property. So now you can buy 2 homes. Maybe one of those 2 is a rental property that you can do the BRRRR method and buy, rehab, rent out, and refinance, and then repeat. So you can start building your portfolio that way. So the idea is you want to get from wholesaling to the next part of the real estate business as quickly as you possibly can, because that's how you begin to build and start moving the direction of becoming passive. Because everyone wants to be on the beach collecting that mailbox money from their 25 rental properties when they're 40, right? Like that's kind of the mindset that people preach. And it is practical and it is possible, but you've got to start moving that direction. And so that's really important. So if you're like me and you don't have a whole lot to start off with, but you don't want to work the 9 to 5, you don't want to work for the big brother, you want to, chase your own dreams, well, wholesaling might be the way to start. And then you just start moving that direction as you gain experience.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Give us some specific examples that compare and contrast wholesaling versus like the fix and flip or fix it up and then hold on to it. What kind of money were you making on your wholesale deals? And then compare that to the type of returns that you were getting on the buy and hold.
Usually, I'm trying to get around a $10,000 assignment if I'm wholesaling, but I'm okay with the 5,000 if it's a quick, easy, deal. I've had some maybe as high as 15 or 20,000 on the properties. But, from a flipping standpoint, you're wanting to make 20, 25%. I personally like making 30%. Who doesn't, right? But, there's deals out there where you can make a really good cash on cash type of return. And so it should be more than what a wholesaler will make. But also I've seen wholesalers get really, really greedy over the last couple of years to where, they're wanting a $30,000 assignment. And they paint the deal in such a way that it's a good deal. And maybe you already have a relationship with them and then you kind of get burnt. And, in a good market, just being very open and candid. Everyone wants to talk about the successes. Man, there was a wholesaler that I've done a lot of deals with, made him a lot of money. And I got just a little sloppy and did a deal with him and he made 30 grand on the deal. And his rehab numbers were way off. And I trusted him because again, I've had a relationship and I ended up losing money on that deal. And it just reminded me, Jason, if you're going to teach and preach, you got to live it. And so it's just a good reminder of, hey, get back into doing what you're supposed to be doing. So that doesn't happen again. But yeah, again, it's all about knowing your numbers. It's that simple. It really, really is. And for me, the one thing that bugs me is if you're going to be a wholesaler, don't bite the hand that's feeding you. I remember a guy once told me, your generation is so quick to step over $100 bills for quick change, meaning they don't want to have that long-term relationship. They just want the quick fix and they don't care who gets hurt in the process. And I think that's so true. And that's such a bad way of doing business. I'd much rather have a long-term relationship if that means I make a little bit smaller per deal. But that also means I'll have more deals with that person.
What's your generation? You millennial?
I'm 35. So I am the early part of the millennial generation. It's so weird. I think like the millennial generation goes from like 1982 to 2000. It's weird how they do the generational years, I guess.
Let's continue the transition here. So you're starting to build a portfolio, you're starting to build a business. Talk about the business side. At what point did you start saying, hey, let's bring other people into these investments?
Well, I think part of it is I already kind of had experience in the investment world, again, doing oil and gas. You're talking to accredited investors who are looking for good people, good companies, good opportunities to put their money to work for them. The problem is so many people get burnt. They put them in a bad deal or they get in with the wrong person or they get in a deal that's super risky. Again, like oil and gas. I mean, so many investors lose their money because they hit a dry hole where there's no oil. And so, they get burnt. And for me, it's like seeing just the ability to create good passive cash flow that's in some ways very low risk because it is tied to a tangible asset just made sense to me. And it's like, okay, let's go find investors that are looking for good opportunity. Some people want to find alternative investments outside of Wall Street. Some people don't understand alternative investments and they're only in Wall Street. And it's like, man, there's other ways to create great cash flow. For example, I literally was on a phone call with a gentleman this morning and he was saying that he's got a couple million in the stock market. He doesn't want to do an alternative investment with me because he's lost money in oil and gas endeavors. And it's like, well, look, how much did you make in the stock market last year? He's like 20%. I was like, okay, well, my equity fund has already provided a 29% appreciation. But in the meantime, it's also provided a 10.5% annualized cash flow. So you're getting monthly cash flow on top of the appreciation. So what a lot of people forget is the stock market is just positions. It either goes up, it's just a position. It either goes down, it's a position. You don't realize that profit or that loss until you sell that position. And so for me, it's like I can create in real estate positions through appreciation, but also provide monthly cash flow, which in my opinion is the best thing. So it's like when you can combine the two of those, it's like you owe it to yourself to take a fraction, just a fraction of what you got in the stock market and put it to work with us and let us show you what you're doing or what we're doing for investors. And so for me, I think that's so important. And that's what I really like is finding great deals. I've got investors in California. It's really hard for them to invest in real estate in California. So they've got to find other markets to do that. Well, we've got deals in Ohio. Now, it's hard for someone in California to do a deal in Ohio unless that they have somebody that they can do the deal with, because you got to have contractors, you got to have realtors, you got to have, title companies and relationships with teams that are in those markets to be able to do that deal. And what you don't realize is you just created a second job for yourself. You're trying to manage all those people and manage the property and manage the progress from purchase to exit. And so it's like if you could work with a company that could do that for you, then that just makes the deal that much more attractive and allows your money to actually work for you. So that's what I enjoy. I enjoy finding great deals and getting investors in it and making them money and making them happy.
How you're finding these deals, what kind of deals they are, and then how you're bringing investors in.
For example, you got like BlackRock, right? They're a $1 billion hedge fund that buys single family homes, but their buy box is like 3-bedroom, 2-bath plus. They don't want anything lower than 3 bedrooms. They don't want anything lower than 2 bedroom or bathrooms. And they don't want anything older than 1980. So they got this like tight niche buy box. I call those sharks, right? I don't have to be a shark. I'm okay being a sucker fish. For all of you who don't know, sucker fishes are the ones who go with the sharks and eat the scraps that the shark leaves behind. I'm okay buying a 3-bedroom, 1-bath house or a 2-bedroom, 1-bath house that was built in the 1950s. I know I can buy that at a cheaper price. I know that's going to cash flow just as good as anyone else. And I know that the competition is not going to be as aggressive for that because the bigger guys want the bigger properties. So I'm okay, kind of following them around and just grabbing the deals that they don't want, because I need to get good deals at a good price that's going to provide a good yield. A lot of these hedge funds, they got, family offices that have billions of dollars that are investing with them, and their job is not to lose that money. So those people are okay with a 4 to 6% return. My investors are accredited investors normally, and their net worths are anywhere between say 3 million and 10 million, some a little lower, some a little higher. But their goal is to build their net worth. So I'm needing to find more aggressive returns. So I don't want anything lower than 9%. In the last 4.5 years of managing 6 different funds, we have averaged double-digit returns. And to me, that's really, really important. So I'm looking for deals that are going to cash flow, that are going to provide really good yield, and also potentially provide the opportunity to appreciate. And then when you have the ability to do both, I mean, it's a bonus.
So how are you finding these deals?
I like using examples. I would fish with my papaw. He lived on Kentucky Lake. He loved to fish. And when we would fish, we would have multiple poles in the water. And I'm a firm believer in having as many poles in the water as you possibly can get. So I got wholesalers that bring me deals. I got realtors who bring me deals. Maybe they're pocket listings. I got word of mouth. We do our own marketing. And what happens is when people know that you're buying, you all of a sudden become maybe one of the go-to people before anyone else gets that opportunity. So through all those different resources and avenues, we have the ability to find really incredible deals. I am in the process, right before I hopped on this call, I was talking with a gentleman who is looking to sell 27 rental properties in Wichita Falls, Texas, and I should be locking those up today. And he's wanting owner finance, which is great for my fund because now I just have to put a fraction down. My cash on cash return is going to spike. And he gets a great deal because he gets that monthly cash flow as well without having any of the liability. So just being creative, finding opportunities to make great returns for your investors is so important. And then when you can prove that model, then they want to start doing more with you, and they tell their friends. And so it's just kind of a winning formula, if you want to call it that.
It sounds like in the example you just gave that you're going to hold the note for this guy.
No, he's going to hold the note for us. Sorry, my lights are sensors and they just turned off. Give me 1 second here. Sell the properties to me, and he's going to hold the note. And he's just an older gentleman, and he wants to get out. He doesn't want to have it, but he likes the cash flow. So I'll come in, buy those properties with a minimal down payment, and provide my investors. I mean, right off the bat, with just all money in, it's 11% yield or ROI. When I only put 25% down, it is probably going to be more in the 20s.
Tell our listeners how they can find out more about you, get a hold of you, and feel free to plug your business as well.
Freaky Fast Home Buyers and Investments is our company. You can find me at jason@freakyfasthomebuyers.com. That's jason@freakyfasthomebuyers.com. Feel free to reach out to us. And yeah, so really our goal is to provide passive income, true passive income. So we'll buy the properties, we'll rehab the properties. We have our own in-house property management that manages the properties. And really what our motto is, write us a check and start receiving checks freaky fast. And so it really is truly that simple. And so you have the opportunity to put that money to work for you. So there's two ways of doing that. One, you can buy a rental property directly from us using cash or financing. We've got financing partners that we can refer you to if you don't have a lender, and then we'll manage the property for you. Or you can invest in one of our funds, whether that's an equity fund that allows you to have a percentage of multiple properties. That's a syndication deal, just like a multifamily apartment complex, but it's in single family homes. Or we also have a debt fund that you can invest in that lends money to buy properties. And a lot of investors like that because it's just a guaranteed interest rate that they get. And you can use money through your IRAs and 401ks and things like that as well. So those are the three avenues, but we're just trying to create that passive income.
What is your favorite hack or app?
Obviously, ESPN. I'm a huge sports guy. Now, you're a Michigan, so are you a Wolverine or a Spartan?
Spartan.
Okay, I'm a Buckeye, so that's a very important question for me. Here's a life hack that it's kind of a stupid life hack, but it's more of a mentality mindset. If you find yourself in a slump, go get a haircut. And the reason for that is, everyone gets in a slump. If you play baseball, you could be the best hitter in the game, but you're gonna go through a slump. That's just life. And sometimes what happens is you get used to hitting a lot of home runs, maybe, and then you start over correcting your swing, and then you start, taking bigger swings and striking out, and you got to reevaluate, what you're doing to kind of get you back on track. And so the haircut, it can be a practical thing, or it could be like an example thing. Like I remember when in one of my slumps, I was just depressed. I hadn't had a haircut in a while. And so I was just looking kind of shabby, right? And I just went and got a haircut, and I just felt fresh. I felt new. I felt like some energy had got pumped into me. And I went out and got a deal. So it don't necessarily need to be a haircut. It just needs to be kind of like taking a step back, getting a fresh approach on what you're doing to kind of jumpstart you. So if that means bunting, instead of hitting a home run, just bunt. Just get a hit, get on base. And eventually you'll score runs and you'll get out of that slump.
Jason, thanks for coming on the show today and sharing your trajectory from wholesaling to then buying and holding, and then kind of building out a business where you're providing passive investment opportunities in single family homes. It's been a really interesting conversation. I've enjoyed talking with you. Thanks so much.
Yes, sir, Brian. Thank you so much for having me on. I really appreciate the opportunity. It's an honor.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIGinvestor.com.